Good morning, all. TGIF. We've got NFP today. We had a big data release yesterday in ADP, and it came out incredibly strong. And that was a little bit of an issue for the Fed because they want less jobs ideally. It sounds counterintuitive, but the more jobs that's created, it's more inflation pressure. And they're trying to get the inflation down. So Powell doesn't mind a little bit more unemployment, which sounds like I say counterintuitive, but he's just looking at the inflation and he's trying to really desperately trying to get it down. And with a huge jobs increase, that didn't help. And we saw a big move on risk, which I'll show you on the indices, and just to show you that some of these currency pairs have really shifted as well. The Kiwi CAD has shifted 52% in a week, which is really crazy. And I'll show you the scores as well. EU's just messy and mixed, so you can see there's not a very clear signal from the Euro USD there. I'll show you the scores, and I'll show you the indices, and I'll update you guys on the robot. So pound CAD strongest, and Aussie Kiwi weakest. So we should be seeing red cells down here. We should see green cells up here. So the Euro Aussie, it could probably do with being more green, but we have to remember that the Euro Aussie is quite sensitive to risk on, risk off flows. So if we go risk on, this is going to go poor. This will be poor because Aussie is riskier than the Euro. Okay, so we have to remember the fundamental relationship of particular currency pairs and risk appetite. For example, the pound Aussie would be sensitive to risk on, risk off flows. Okay, so if we go risk off, this is going to shoot up fundamentally. Okay, but if we go risk on, this should fall. So that's the reason for that being negative, is because of the fundamental correlation. Okay, so it's just not necessarily the technicals and the sentiment, but the fundamental too. All right, so that's obviously a very key thing to know. Also, like for example, the pound Kiwi, that's a sensitive one. So the Kiwi is riskier than the pound, and that's how it works. Okay, so that's just a little tip there. Our failure rate is poor, but that's fine. But I was going to say about the risk calculation is really poor. We were 89 on Friday before Independence Day, the weekend prior to the bank holiday. 89 out of 100. We're now at 17. And now the reason for that is because we had that data dashboard, and scroll up. And so we can see like the Dow Jones plunged 366 points, S&P fell 35 points, Nasdaq 112. All of these negative performance is impacting our score because we've got our weighting on it as well. So it's possibly going to be setting up for a pump today, but it's very risky, isn't it, to say what's going to happen in the future. No one really knows. I'm not sure if you ask me if it's a good time to buy X or sell. I can't say because I don't know what's going to happen, right? So you have to check your charts and then know where your exit is and things. So, so DAX would have been a sell at 158.05 with a stop at 158.82. So you're looking to enter with a stop here, and then that's how you could have probably traded the DAX this week. And likewise, that would have been a good one as well. That would have been a bit hairy, a bit scary because it looks like it's coming up to take you out, but it did fall, right? So you're looking using these boxes, okay? And if you want to know the indicators, it's in Discord in Trade of the Day. So let me show you the indices. And I felt a little bit better today. I still feel quite bunged up, but that whiskey helped yesterday. It was quite good. Dow is making a buy. It doesn't look like it, but if you look at the crossover, we are, 36.86 is a smaller number than 37.39. So we have had the crossover, so therefore buy. So you're looking for longs, but maybe you want to see a break of that first, just for confidence reasons. But making a buy, okay. S&P. And we made the buy, so we can draw a box. We couldn't draw a box on Dow Jones because we haven't really had the crossover yet. Here, so we should be above 4415, like I said in Discord. Oh, okay. Oh, God. Something like that, isn't it? Something like this, where we should be above that box. bucks. So keep an eye on that 4415 level, okay? And yeah, we had some trades that went to stop loss on our robot because the dollar, it did have a bit of a wobbly, and the dollar was under quite a lot of pressure while risk was falling. So that was quite confusing from a fundamental view, in so much that the dollar should have really pumped if things are falling, but it was being suppressed and it was being hammered down. Very much how they manipulate the VIX, and they will hammer down the VIX, the fear, whenever they want. They did it on the Dixie yesterday. It was quite frustrating, and I encountered 2 losses on my manual trading yesterday. So really what happened here is that they went long. I haven't looked back since. So we made 1 box. You can see how they've gone long. Gone long, gone long, gone long, went long, now gone sideways. So I was saying in the Discord that a break of this would induce panic and fear, and then they'll sell it, and then that'll be a buy. And show you the robot quick. I thought I was going to sneeze then. And all right, so we're looking at AU longs, which are coming into the trading stop, which is great, and looking for Kiwi Swiss sells, dollar yen buys. We can see, can't you? The worst performing trade are UJs, which is probably going to encounter a loss. It will be up on the week, but it looks like it won't be as good a week as we hoped, but it will be positive. And it looks like it might just be dollar yen. Might be a little bit naughty, but really technically dollar yen's quite strong. So you kind of like looking for buying dips. But we have to remember the BOJ intervention likelihood, and that's going to impact the cross yen. So that's how we stand. Indices might be okay today, and be careful with the fundamental correlation between certain currency pairs like EA and GA. They will correlate with risk appetite, and the dollar should correlate, but it looked like it had been manipulated yesterday, and they wanted it to fall so they could act as a buffer, and that's it. So EU really pumped, and you could probably argue it probably shouldn't have, but we did. Even though risk was falling, we still pumped quite a bit, and it's been manipulated basically. But you can't blame them for not wanting a strong USD, because it's like a wrecking ball. No one wants a wrecking ball, especially crypto, especially indices, especially your other currency pairs as well. So I'll be back Monday evening. I'm going to see my uncle. I haven't seen him in a long time. I'm hoping I don't give him my cold, so I'm hoping that I'm going to get better before Monday, and that's it. So I will speak to you, like I say, on Monday, because there's no COT data. Krishnan's away in India, and is going to produce the report for us on Monday. So we'll have the bulletin and COT report Monday evening, and that's it. So I'll speak to you guys soon. Remember to trade safely, and that's all you can do. Just know where your stops are, and you'll be fine. And also know, if you get stopped out, say twice in a day, just take a seat back and then monitor, like I did yesterday. I got stopped out on EU, and I just took a break, and that's just the way to do it, isn't it? You don't want to revenge trade or anything like that. So I'll speak to you guys later, and on Monday. Have a good weekend.